Good morning, everyone. Welcome to our Friday morning trading session. The market opening very brisk here this morning. Of course, the charts you're seeing here are the NASDAQ, which is one of my favorite markets to trade. Let's take a look at where the market left off and where they opened up. So we left off trading after sliding a little bit down here around the 50-50 level, only to see the market open way up here at around 50-70, 50-72. So we've got about a 20-point gap between where we left off and where we're starting the day. You can see we're also getting very, very close to where yesterday's swing highs were at. And it will be interesting to see whether or not the buyers are able to press on through there, or whether we're actually going to see something of a reversal. We're just a few minutes into the session, of course. As I mentioned, these charts are the NASDAQ. I'm also watching the E-mini S&P and crude oil, but please don't be shy. If there's a market you'd like to see, by all means, if I can get it in my data assortment, I will pull it up for you. Now, typically, what we were doing last year a lot with the Eagle is we were looking at taking the first in sync signal, in which case we would be looking at buying that signal right there. We could do a second push on this, which what that means is we allow the market to engage the signal, then retreat, so we know where the current limit of the market is. The problem I'm having with this trade is, where am I going to cover it? At the very least, I need to cover it to the hard edge. Yes, good idea, Christian. Christian says, can you show us the Donald Trump index for trading in 2017? Yeah, it's getting to that time, is it not? No doubt the inauguration and the new president is going to add a little bit of volatility to the marketplace, as it does every 4 years. Overall, we're kind of bullish across the board. We got a first micro-macro cross signal here out of the open as well. I should have tried that one. I spotted it a little bit too late. Now, you might be looking at this hawk and saying, Eric, how is that a first micro-macro cross? The micro-macro lines crossed way, way, way back here somewhere. Well, you need to remember what the first micro-macro cross is showing you. It's showing you a market that is out of sync, and then it comes back into sync. So in other words, our trend lines are out of sync, our bar colors are out of sync, our filter is out of sync. And then everything comes back into sync. Well, I wasn't so keen on trying the Eagle signal. I certainly would have tried the first micro-macro cross. That would have been, we had a little bit more structure here, probably would have risked the trade down to here. And since it's only a single, I would probably try to double my profit objective or put a runner in play. See if I can't run it out any further. But there's a quick little scalp for you, a little poke to the upside. You can see here the order flow going through. Big chunk of buying going on. Overwhelmed the sellers. And that's probably what led to this rally here. You can see we actually got the cloud crossover signal here during the London session. And we're continuing a little higher from there. Crude oil also making a nice little rally. Here's crude oil on the Raptor. Almost a carbon copy. Where we get the cloud crossover signal producing here during the European session, and another very strong overnight. We've rallied now 1, 2, 3, 4, 5 zones, topping out at the resistance there at 53.53. Tony asks, do you remember the Ray Burke NASDAQ Open first signal trade? No, I don't. I'm not sure Ray ever shared that one with me, or I was in the room at the same time with Ray. It's not an unusual philosophy, though. I know a lot of traders that try to jump on early momentum by looking at the first trade out of the gate. And then there's a lot of traders that look for the 10-minute reversal. 10 minutes into the session, they expect a reversal. So we're coming up on 10 minutes right now. We're trading 9 minutes. So we'll see whether we get a reversal here 10 minutes in this morning. Excuse me. Looks like I shouldn't have been so hesitant on that signal. That's paying off nicely. I think that's the right one. Oh, that's pre-market, is it? Just a minute into the session. This is actually the first signal that printed right there. But regardless, we've also found our profit objective on that one. So great little move. It does seem though as like the sellers are starting to load up a little bit though. Okay, so we've topped, looks like around 50.83. Ooh, look at that spike go through. That's just a mountain of buying. What I'm looking for now is a little bit of a retrace, a possible retest of the high, and then a failure, which would be our number 2 signal, the soft edge sell, and a possible, well, if not full change in direction, at the very least a retracement perhaps here to the hard edge, which is also somewhere near the low of this morning's session. Similar thing happened yesterday, of course, where we saw a big rally through the morning, or half the morning, only to be reversed. Okay, we're getting a red bar buy signal here on the hawk now. The red bar buy signal, of course, you can trade this with trend. Remember, we're looking for a retest of the high, or you can also set this up counter trend. Oops, wrong button. I would like to see the market try to get into that opening range gap. I think that would be a fairly predictable move. More so if we get a retest of the high. It's not going to be quite so predictable without that retest. What time is it? Oh yeah, here we are again, quarter to the hour. Go figure. Perhaps my least favorite time of the day to trade. Okay, looks like we're going to try to short here. Oh, still holding. being a counter-trend signal, of course, it's by its very nature, it's higher risk. Oh, there we go. We might be getting that retest now after all. Tony asked, Eric, sometimes I get a, a voice prompt, for example, number 2 short, but no visual cue or stripe. Does this happen to you too? Truth be told, Tony, I've got the audio alerts turned off because I think you guys can hear my system audio. And because I've got so many charts going, somebody complained once saying that it was hard for them to concentrate on what was going on. So I've since turned the audio alerts off. That would be a question for Ben, however. It is possible. It may just be printing the warning, though. I don't know if it occurs right when the triangle on hash mark print or just when you're getting the warning dot. We don't have all the components for number 2 yet, though, so it shouldn't be getting... Jim says it's the same thing for him. He believes it's when the warning happens. That could be, but you could make mention of it to Ben as well. He may not have synced the audio alert with the pre-signal parameter, which is what I'm suspecting. Okay, we're getting a first micro-macro cross now here in the Hawk, a trend change signal in the Falcon, and the Raptor almost queued up for a number 2 signal to short. Okay, here we go with that retest. So I guess we did get that reversal today, didn't we? That little hiccup lower 10 minutes into the session, at least for a few minutes. And now we're coming back with a green bar sell here on the Hawk, which is a more aggressive short. I might consider this, but only with a single. Because the trend is up, right? There's no question the trend is up. What I'm looking for now is a failure and a possible move lower. Still getting a green bar sell. Look at that. Ooh, this is going to be a little dicey. This, by the way, if you're looking for a trade to follow on, it may not be the best signal. This is very aggressive on my part, trying to step in front of this bull market. All right, here we go. We got a complete signal now. Okay, and what I'm going to do is I'm going to try to run this out a little. And the only nice thing about a counter trend signal is that usually you can cover it relatively tight. All right, sellers, where'd you go? Pretty important bar that we're watching unfold. You can tell the struggle. Just wanted to make sure my soft edge sell signal had the right setting on it, because that's what I'm expecting now. I'm expecting a soft edge sell to cross. pop up. Oh dear. Still a little bit bullish. Uh-oh. Uh-oh. Come on, sellers. Yeah, Francisco says the market tested and is trading above yesterday's highs. You are absolutely correct about that. Yesterday's highs sitting here around the 50, 75-ish area. Well, in a way, it's foolish to try to sell into an uptrend without first seeing the test of the extreme. That's what I mean. I got a little bit anxious on this, getting a little cute, trying to forecast that the market's going to turn at this point. Interesting comment here from Andrew. Andrew asks, Eric, do you look at the E-mini to see why the NQ behaves the way it does? The E-mini pushed up. No, actually. A lot of people ask me that. A lot of people think that the E-mini is the leader in the stock market. It's actually a follower. The E-mini actually tends to follow what is happening in the NASDAQ and the Dow. The late Marshall Jones actually developed a trading system, and he wasn't even watching the charts. He would just watch the order flow in the NASDAQ and the Dow, and if he saw a spike in the NASDAQ and the Dow together, both in the same direction, obviously, he knew he had a couple seconds to place an order in the E-mini, that the E-mini would actually lag by a few seconds. While we're waiting for this trade to unfold, I'll grab my E-mini chart. We'll put it down here. And you can see, okay, the NQ is ticking lower. And now I don't have a Dow chart up. Again, the idea is that you see a spike in buying or selling simultaneously in the Dow and the NASDAQ. But just following the NASDAQ here, you can see the NASDAQ is starting to tick a little bit lower. The E-mini is still kind of holding. There it goes. It's following a couple of seconds behind. So there you go. You have a little bit of a crystal ball. But again, the way Marsh did it is he followed the NASDAQ and the Dow. And he didn't even watch the charts. He just studied the order flow. I used to watch the 30-year bond for the same reason. The 30-year bond and the stock market in general tend to have an inverse relationship. So in other words, if the stock market is going up, bonds should be going down. And likewise, if the stock market is going down, bonds should be going up. they say the bond traders are the smartest traders in the world. And at $31.25 a tick, I believe it. You cannot afford to be wrong all that often when you're trading bonds. But even there, it's not a one-to-one relationship, not anymore. Okay, we just hit our break-even trigger on this trade. And I could continue to hold my stops here. This may turn out to be a little bit aggressive on my stop. Don't tag me. We have hit our $50 objective, so if I were smart, I'd probably take that. Come on. Let me ride out this little swing here. Elmer's asking, Eric, if I push the panic exit the entire trade manager closes down. Is this correct or wrong setting? No, that's correct, Elmer. That's why it's a panic exit. It shuts everything down, flattens everything in that trade. So if you don't make a habit of, when you shut down on your control panel, go to your flatten everything button, you can hit your panic exit at the end of the session and make sure that you are flat before you finish trading on the day. Come on down. Come on, you stinkers. See, it may have been wiser to roll the stop to break even once we actually traded below this morning's lows here. This is going to be very, very cozy. Oh, they're trying hard. Come on, sellers. Let's go. Once we get below the lows, I'll probably switch to a more aggressive stop, something that's going to try to keep a little bit more open profit in play. Okay, now we actually do have a number 2 signal right here on the Raptor. 1, 2, 3, 4, 5. Let me see if I dial down the bar requirement. have to dial down the sensitivity a little bit on this number 2 signal. This is a decent retest, and we have seen the signal. So what you could do is you could treat this as a second push entry, and you could look to short on a move below the low. And we would be looking for a retrace here to the hard edge. And don't worry, we're going to be going through the Raptor signals as well to help you gauge these other signals that don't print, whether or not they're worthwhile taking. And then, of course, you need to be able to recognize how the signal develops. Just in case your sensitivity to the current market condition is just off ever so slightly, as you can see it is here this morning. That's a nice feature about the new Raptor, though, is it's extremely tweakable. Boy, this support zone is holding strong. If I wasn't at break even already, I would probably take this trade to break even now here on the Hawk. I wouldn't be in much of a mood to try to ride it out. Because the momentum seems to keep tossing back and forth, right? We're down here at this support zone. Obviously, the buyers are trying to buy it up. The sellers have control of the market at the moment, but if they can't breach 50.73, the buyers are just going to turn it around and rally the market again, in which case I may as well take my break even. What am I up? $75. That's still worth taking. $75 now or nothing later. Tony, I don't know if you noticed here on the Raptor, Tony's asking, I don't have that number 2 signal printing on mine. I went into the, hold on, I'm going to pull up a different chart because I don't want to spoil that signal. Where'd you go? So what I did is I went into indicators and I found the Raptor, and then you scroll down here to signal parameters SE, which stands for soft edge, which is the number 2 signal. The default's 1.01 and minimum retest bar number 5 bars. I thought by decreasing the bars to 4, it would give me that number 2. It didn't. I had to reset the sensitivity, and I set it to 1.25. So I dialed it up. The higher the sensitivity number, it's actually an inverse relationship. The higher the sensitivity number is, the less sensitive the programming is to spotting a number 2. Or the more accepting it is, however you want to look at it. The lower that value, the more particular the system will be in finding a counter-trend signal. And I suppose since it's counter-trend, that's not a bad thing. But like I said, even without the signal printing itself, we'll be going over the signals on one of our training days so that you can recognize that, hey, that's a number 2, regardless of whether or not it prints. You're going to be able to say, oh, that's a number 1, regardless of whether or not it prints, although the number 1 is a pretty solid signal printing. There's nothing too subjective in a number 1, or even a number 3 for that matter. The number 2 is the only signal that has any subjectivity to it, which was a real challenge for the programmers, let me tell you. I thought they were going to put a hit out on me because I kept coming back, highlighting all the places it should have printed and it didn't. Still very, very balanced market. Still a bull market, but the longer we spend going sideways, the less influential this early uptrend is going to have on the market. Jeff asked, did you leave the bars back at 4? Yes, I did, but honestly, I don't think the bar count itself is going to matter as much as the sensitivity value. I've decreased the sensitivity of the number 2. Steve asked, can you say that again? Number 1 is best or number 2 signal? No, you shouldn't think of them in terms of best. There is no best here. They're different signals entirely. What I said was the number 1 signal was very easy for the programmers to program. The number 1 signal, when it prints, the number 1 and the number 3, the guidelines for a number 1 and a number 3 are more exact than the guidelines for printing a number 2. A number 2 is a little bit more subjective. It has this retest component in it. You can't have a number 2 without first seeing a retest of the high. That's where that sensitivity value comes in. The programming is trying to judge, is this an accurate retest of that? And it looks at several values, and you can adjust the sensitivity of those values via that sensitivity parameter. So you could make it that the programming would recognize this retest as a number 2. This is also a retest. You can change the programming so that if you wanted this to be a retest of that high, you can make the Raptor that sensitive, that it will pick up even a micro retest. Or you can go the other way. You can say, I need to see a really solid retest. I need to see almost a double top before I'm prepared to accept a number 2 signal. Unfortunately, fortunately, the number 2 signal, is a little bit more visual. It's easier for us as humans to recognize, yeah, that's a retest, than it is for a computer, because of course a computer does not think. And this is where people who argue that artificial intelligence is going to take over the trading world and whatnot, maybe not in our lifetime or in our career or in my career for sure. Because there's just too many variables. I know, computers do the bulk of the trading now on the trading floor, but those are mostly HFT, high frequency trading computers, and they're not looking for anything, any major moves. For the most part, they're not looking for any major moves, but they're still going to be sensitive to support and resistance areas. They're still the programming will still recognize that, hey, this whole 50-80 area has bogged the market down. Just like our number 2 signal. Those HFT computers are going to recognize that, hey, this has been a test of the extreme. The market is struggling to get above 50-80. Let's short it. Now, to be fair, they're probably shorting, right here at 50-80. They're starting to gang up as soon as they notice the market's not ticking any lower, and they're in and out for maybe a couple, 3 ticks at the most. We can't really trade that way. The commissions would eat us alive. So we need to concentrate a little bit more on trying to catch a little bit of a move, at the very least a scalp type move, and ideally even a swing style trade, which is what the deal is here with the Raptor. Okay, now here on my Hawk trade, I've got a little bit of open profit now, just over $100. What I'm thinking is, okay, we've just violated a significant support zone, right? When this happens, the market tends to give us 2 moves in the direction of the breakout. This is move number 1. Somewhere through here, there's going to be a little bit of a retest. I don't want to throw my stop in just above that high or overly tight, because if it moves up just a little bit, I'm going to get stopped out. And it will move up. That's a given. We're going to see a macro pullback or perhaps even a 4-arrow consolidation. Obviously, I don't want it to trade up here and hit my break even. But I'm hoping that this old support zone is going to contain the market reasonably well, and then we're going to see move number 2 lower. Now, the first 2 moves tend to be the strongest. We're still in an uptrend here, however. So I need to be careful not to get too ambitious or cocky with the market. But the next move lower, I do believe the market owes me 1 more push lower. Next move lower, I'm going to start to get a little bit more aggressive with my stops. And we kind of got the same thing going on here with the Raptor now. And who knows, with a little bit of luck, we may even see the market fill that morning gap. Yeah, Tony, you're a little bit of a comedian here. Tony says the crude oil market is on a tear this morning. Yeah, maybe in the overnight, not so much this morning. This is crude oil here this morning, just kind of stuck. Yeah, Steven says, get off the NASDAQ. The YM has already given 2 profitable signals. I used to follow the NASDAQ and the YM side by side. And they do tend to move in sync for the most part. Jeff asking, can you please show me where you made those adjustments? You know, folks, for you Raptor owners, it's worth your while just to take a couple of minutes and go through the settings here. It really doesn't take you very long. So you're going to go to your indicators window, and you're going to go here to your Raptor 2.0. These settings up here, your alert settings, not so much to worry about. The data settings, nothing to change. The visual, nothing to change. The audio, you can turn your audio on and off. I tend to leave mine off. Now you can start getting into some of the settings. So we've got the brick sizes of your clouds. For most markets, these will be default. For the E-mini, if you're an E-mini trader, you're going to need to adjust them. And just really quick, we're going to go over this in more detail on one of the training days. But your brick size is going to be 6 and 4. And then your hawk brick size is also going to be 4. And now we get to the juicy part that we were talking about this morning. So we've got the signal parameters for the hard edge signal and the signal parameters for the soft edge. So the extreme retest sensitivity, that's the one where by default it's set at 1.01. I dialed mine up to 1.25. I don't think you're going to need to set the minimum retest bar stop, but I happened to change mine to 4, thinking that would be enough to turn the signal. And we're not going to play with this right now, but you can also switch to version 1 signals if you like. And then you can change the fonts as well. For those of you like me who appreciate larger fonts, you may want to change that to something a little bigger. Okay, looks like we're on the second leg of the move now, so I'm going to let's go with parabolics. Parabolics pretty good at keeping you in a trending market for as long as possible. They keep their distance so long as the market is trending, and then when things slow down, the parabolics tend to come in a little bit quicker. Very, very clever programming by Wells Wilder, of course, the developer of the parabolic system. Paco is asking, Eric, what then is the recommendations for the number of the extreme retest sensitivity? I normally go with the default, which is 1.01. But like I said, we knew this was a number 2 printing, right? We knew that. So if I go back here and I put the default settings on, here we go. So we're going to go 1 and 5. See, it didn't print. And everybody's going to send me an email saying, Eric, why didn't that print? Isn't that a number 2? Yes, it's a number 2. And yes, 99% of the time, the system will pick it up. But for whatever reason, either this little stutter step in here that the market made, or perhaps it's just a tick shy for the current settings to label this as a number 2. But we still saw it coming. So all I did was just adjust the settings a little bit. There's going to be a little tweak period through here. We did a lot of testing with the new Raptor, but there's still, live market conditions, sometimes not always the same as the testing conditions. And there you go. So I just made the signal. I should actually get Ben to change that label. It should be it decreases the sensitivity. So a higher value makes the number 2 signal a little bit more liberal, shall we say. Now watch, I'm going to dial this up even higher. I haven't done this before, but this will be a fun little experiment. So let's do something silly, like let's dial it up here to, I don't know, let's try 5. And, okay, let's just leave it at 5, see what happens. Aha. Remember how I said you can make it so sensitive that it will pick up any attempt at a reversal? Well, look at this. It picked up these bars right here as a reversal, printed a number 2, picked up this little hiccup right here that we were looking at before, printed a number 2, and then of course caught the real retest of an extreme. So the number 1 default setting may be a little bit too light. We may have to dial it up a little bit for the NASDAQ, but like I said, that's the beauty of the new Raptor, is you can customize it for any market that you're trading. So if you're following crude, or if you're following soybeans, or if you're following gold, you can adjust the settings to alert you to the number 2s or the number 1s or number 3s, whatever the case may be. So, this was very plainly a number 2. We knew it was coming. We just needed to adjust the Raptor ever so slightly. Yeah, no, Paco says with the default settings of 1.01, I don't get the number 2 signal. No, I know. That's the whole point why we have to adjust the sensitivity a little bit. Yeah. Tony says, I'm sitting here complaining about the settings and realize I'm up $1,375 for the day. Nicely done, Tony. He says, I'm just going to shut up and learn now. Yes, folks, these are tools, right? These are all tools. Just like if you're a mechanic or a carpenter or whatever, these are tools to help you find the best signals. Now, if you're a carpenter and you have a really fancy table saw, the table saw is not going to build the furniture itself, right? You just can't put the wood on the table saw and walk away and say, okay, table saw, build me a new coffee table. That's not the way it works. But if you have, quality tools, you can do quality work. Now, that doesn't mean that there isn't some adjustment along the way. So don't panic because the default settings may not be perfect for trading the NASDAQ or crude oil or gold or whatever. Again, the whole purpose of the Raptor 2.0 is to allow you the ability to make changes to the system so that you can optimize it for the market you're looking at. Gary's asking, Eric, can you please repeat what you said about the YM settings? It wasn't actually the YM, Gary, it's the E-mini. And so here the E-mini, because the E-mini is trading at 12.50 a tick, unfortunately it's, of all the popular markets, it's the one that falls outside of the default parameters for bar sizes. So again, we're going to go over this in more detail, but you're going to want to change your brick size to 4. And then here on your Raptor, you're going to change your cloud size to 6 and 4, and your Hawk brick size to 4. You need to speed things up on the E-mini. If you do the E-mini on the defaults, it's not going to display correctly. So here, let me do this. Well, it will still display correctly. That's not the right word to use, but it's not going to give you a whole lot of signals. Now, if you're looking at it from an end-of-day trading point of view, then that's fine. Just bear with me here a moment while I reload the E-mini. Okay, so here's the E-mini with the default settings. And these vertical lines are your daybreak lines, and I'm getting ahead of myself. So when we do the session on changing some of the Raptor settings, this is going to be a little bit redundant, but we're on the subject now. So now if you're trading end of day, okay, this isn't so bad. If you're prepared to hold your position for a while, this isn't so bad. But if you're day trading, unless you're prepared to watch the market 24 hours a day, you're not going to get very many signals, are you? That's because the E-mini trading at a higher tick value and just the way that the market trades is not very fluid with the default settings. The default settings are bogging it down. Compare that with the alternate settings. Same chart, but hey, look, we're actually getting some tradable signals, something that we can day trade. Right, so it just spreads things out a little bit. Never mind the market's moving sideways here. You can see that the point of the exercise is that you're actually getting some signals that you would not have had access to if you were just trading the default brick sizes. Okay, so that's why we have the alternate settings for the E-mini. Now you may also have to use the alternate settings on some of the other higher tick value markets. For instance, if you're trading soybeans or wheat or corn, those trade at 12.50 a tick. They tend to do a little better with the alternate settings. If you're trading, what other one works better on the alternate? Well, you can tell just by looking at it, right? You can see, okay, my daybreak lines are coming too close together. I should go try the alternate settings. Sometimes if I'm following the British pound, if the pound is really active, I'll stay with the defaults. If it seems to be dragging its feet, I'll go to the alternate settings. Mark's asking bonds too. Yes, but with bonds, because it's $30 a tick, we dial it down even more, and we go with a 2-tick hawk, 4-tick clouds, and a 4-tick brick. Or pardon me, a 2 and 4 cloud and a 4-tick brick. Otherwise, you'll have the same problem. You won't have many trades to do, at least intraday. Again, if you're looking to trade end of day, if you're looking to hold, then that's fine. You can leave the settings just the way they are. You can go with the defaults across the board, but you won't have very many intraday trades. You'll take a signal and you'll hold it for 1, 2, 3 days, however long it stretches out. Okay, so we're back in a holding pattern, waiting for our next opportunity. We drifted back here to the hard edge, which was our objective. Also hit the median line on our support and resistance assortment. Getting a little bit of a macro pullback here. The problem now with this signal is covering the position, right? Where are we going to cover this trade? If I take it here, well, at the very least I need to cover it at this old resistance area, but that seems a little cozy. The ideal would be at this swing right here. There we go. Just kissed the profit target. It should get through there though. Don't know if it's going to get through the lows, but it should get down there. The market turning a little bit more bearish now. Pretty much recovered the opening rally. keep retesting those lows. I'm looking at the Hawk and the Raptor, wondering whether or not that's going to turn into a double bottom type idea. All right, Gary's asking, Eric, I'm trying to set up an OCO order on Trade Manager, having trouble. Can you show me how? Absolutely, Gary. Now, I have a feeling you're probably doing this. You're clicking OCO, and then you're going here to set prices, and you're not getting your OCO order. It's because when you go to the OCO, you need to right-click on your chart, and then select your buy order, and then right-click and select your sell order. Now, these orders are live the moment you put them on your chart. So what I tend to do is I tend to place them away, and then I'll pull them into where I want them to be. Now, when this OCO order fills, if you have your stop enabled, it will automatically trail a stop for you. However, the OCO does not preset your profit objective. So if you want a profit target as well, you can toggle your OCO and you can set profit targets. Let's say you want to take profit here, and you want to take profit again down here. Now notice the OCO function assigns two different numbers. Right? This set of OCO numbers is number 2, or orders is number 2. This set of OCO orders is number 3. So what happens if I cancel one of these orders? The corresponding order will cancel. Likewise, if I cancel one of these orders, the corresponding order will cancel. Mike's asking, have there been any changes made to the Hawk, the Falcon, or the Eagle? No, sir. No, those are still the way they've always been. The programming behind those is pretty tight. I don't think you're ever going to see any changes to the way those tools perform. Like I said, the Raptor, we had owners who were looking for a little bit more tweakability. They were looking for a laptop-friendly systems, you know, something that doesn't require a lot of screen real estate, and simplicity as well. That's a key feature of the Raptor, is the simplicity of it. It does pretty much the heavy lifting for you. Gary, I'm not quite sure I understand. Gary says, thanks, but I'm looking at the OCO button on Trade Manager and how that ties in with the trades that I've placed on the chart. Well, unless you've toggled your OCO on and placed your, your orders by right-clicking, it probably will have nothing to do with the other orders on your chart. If you've been using the Trade Manager to say set your risk, these orders will have nothing to do with your OCO orders. And if it's still not clear, what you can do, if you have your orders on your chart and stuff, you can go down here, right-click on your chart, go down here to Image, and you can go Email, and you can email me a chart. And you can email it to, well, this is my Gmail address. They all go to the same place, so it doesn't matter. You can email Eric, that's E-R-I-C-H, at supportandresistance.com. Or as some of my friends like to say, hey, E-Rich. We're slipping a little bit lower. Had a nice little trend line touch here on the Falcon, but the same deal applies as with the hawk trade. Covering the position requires a slightly deeper stop. Right? Up here is ideal. Suppose you could use the secondary resistance line, take a little bit of risk out of the trade. Oh, I see. Gary asked, I'd like an example. Can you give me an example when to use a OCO function on Trade Manager? Well, typically I use it if we have like a sideways moving market. So, let's say we're taking a look at crude oil here this morning. And you say, well, shoot, crude oil's just spent all morning going sideways. Maybe I'll just bracket it. Or actually, let's look at down here. This was no, same thing. Maybe I'll just bracket this range. So you hit your OCO and you'll say, okay, I'll buy above and I'll sell below. So I know there's support here. I know there's resistance here. If the market trades higher, I'll buy it. And if it trades lower, if it trades through the lows, I'll sell it. That's when you would use an OCO function. OCO, of course, standing for one cancels other. You can see here an OCO function would have served you pretty well. You have obvious resistance, obvious support. The market breaks out, keeps going higher. Yesterday, the market's just dead sideways the whole day. So you can look at yesterday's range and say, okay, I'll buy a breakout above, I'll sell a breakout below. So, other than bracketing a market range, you probably wouldn't use an OCO order. And you can do that for any type of congestion pattern. So, if a sideways price congestion is the most obvious, but let's say you were looking at this and you saw this more as a pennant style formation. You could use an OCO the same way. You could buy above here, you could sell a breakout below there. Or you could even make, smaller pennants if you wanted. And you could use an OCO to trade a breakout higher or lower. Well, it looks like the buyers are finally showing up. Remember, when we encounter the hard edge, we expect some sort of reaction. Now, that's the hard edge here on the Eagle Cloud as well as the hard edge on the Raptor. When the market encounters that hard edge, we expect to see a reaction of some sort. Now, does that mean the reaction is always going to have a lot of follow through? No, it does not. But we get a reaction all the same. See here, it blew through a little bit, came back, and gave us that reaction lower. Oh, didn't get much reaction here, just a tiny little push. I guess it was rather delayed when the clouds started actually turning over on themselves. This is rare. Typically what happens is we get a more pronounced reaction. Something like this. Market comes down, hits the hard edge, we get a reaction, and it comes back with, hey, look at that, there's a number 3. So it remains to be seen whether this is all the reaction we're going to get, or whether we're actually going to see a little bit more. I would think we should see at least a little more. We're still holding steady. Pretty steep little trend line we've got going. Yeah, Francisco says we're trading near the low of the morning, and that is true. Taking a little bit of a bounce off of the median line right there, that gold line. Well, I wonder if that's all they're going to give us this morning. Getting close to the lunch hour when typically the market spends a lot of time just going sideways. So here's a, oops, got the wrong session. Just built a little 5-minute chart for you. And you can see how, actually let me put the daybreak line back in. Okay, so, pardon me, here's yesterday's session, the market rallied up, and then here is the lunch hour. Right through there. Now it's a 3 martini lunch to be sure, but they take their time getting back at it. Here's the day before that. Market rallies up a little bit, comes down. They actually pressed right into the lunch hour, and then they kind of went sideways. Through there. You can probably even pick out the lunch hour without even looking at the timestamp, just whenever the market quiets down and just starts drifting sideways. This whole day was lunch hour. Well, that was the 16th. That was Monday. That's a, was it? Oh yeah, the holiday. Duh. And then here, this was actually a little bit more active. They rallied and fell through the lunch hour. This is unusual. We normally don't see that much activity through the lunch hour. Likewise here, this was a very, very strong session through the lunch. That doesn't normally happen. Oh, see, now they're making a liar out of me. Getting some big moves through the lunch hour. Okay, it can happen, but most times it looks like this. Most times the market just starts drifting sideways. Yes, Francisco says lunch should be around 12 to 1 p.m. Eastern. Yes, you would think so. But typically from around 11 to 11:30, the market already starts to show signs of a lunch blah. And likewise, on the other end, a lot of them don't get back to getting serious about trading until 1:30, sometimes even 2 o'clock. And then they're into the closing range. Typically, however, it's always the morning session that's the most active. And you can see just by the pace of the bar as well. You know, these bars unfolded rather briskly through the morning here. We got a nice little rally. Then the market got a little subdued, but then we saw the bars unfold again rather, you know, on a decent tempo. And then here we are just kind of sitting sideways. Yeah, lunch blah. Mark says that's a new technical term. I like it. Yeah, that's it. Elmer asks, did anyone try to do a statistical analysis going back on the new Raptor 123 signals using the targets and how often it would have worked? Yes, actually. We did extensive testing with that. And that's why, well, obviously we can call them high probability signals because they do have a high probability of reaching their profit objective, which, in case you're curious, is $100 per contract. So you need to adjust that target for your market. In this case, the NASDAQ trading at $5 a tick gives us a 20 tick target. If you're trading the E-mini S&P, you would have an 8 tick target. And if you're trading crude oil, you would have a 10 tick target. Although to be fair, crude oil being more volatile, I tend to double the objectives. But your high probability target is $100 per contract. Yeah, Jeff says, regarding my comment about trading in the morning being the most profitable, Jeff says that's because the pros know what they're doing and have made their money by 11. And there's a lot of truth to that. That's the whole reason a lot of people monitor opening range as well, for the same reason that the professional traders, the larger traders, they get busy early. They get their orders in, they take their profits, or whatever their objective is, and then they don't mess around with it anymore. It always seems like it's the little guy who has the production mentality who's got to be watching the market every moment of the day. And yet that's not the best way to make money. Well, Andrew makes a good comment here too, and there's a lot of truth to it too. Andrew says, I'm beginning to think that what we think of as pros are simply organizations with deep pockets. And there is a lot of truth to that, but they have different agendas. Goldman Sachs has a different, well, we all have the same agenda. Sorry, it may be the wrong choice of words. We're all here to make money. But the way Goldman Sachs chooses to make money is going to be different than the way that you choose to make money. Bank of America, Goldman Sachs, they can profit whether the market is moving up or down. It doesn't matter so much for them because, again, they're trading volume. They can look at a market and they'll know the underlying conditions of the economy better than, say, you or I. And by the way, by the time you hear it on MSNBC, it's old news. But that doesn't mean you still shouldn't have your accountant deduct your cable subscription, or at least a portion of it. But that's another story. But rest assured that, the large organizations, they can make money. Let's go back here a couple days when the market was very, very sideways, where it's very difficult for you or I to make money on a day like this. They can make money whether the market is going up or whether it's going down, short term like this. And again, because they're trading volume, they have, they don't pay commissions like we do. Yes, they still owe the exchange fees, but again, they're trading such volume that they get deals like you and I don't get. So Goldman Sachs can be long, Bank of America can be short, and both of them will end up making money on this trade. Whereas you and I, we need to have a little bit more directional bias. We need to be holding on a little bit longer, for the most part. That's not to say, Goldman Sachs or Bank of America won't be seriously long the E-mini, or if you're George Soros, he was seriously short the S&P, and he just had to cash out for the tune of $1 billion loss. So they have, they've got their long-term objectives, they have their short-term objectives, but we can't, for the most part, we can't trade like they do. Now, if we find out, say that, Goldman Sachs is bullish the stock market, well, then it's to our advantage to be bullish as well, isn't it? What did I just hear the other day? Oh, yes, I was over at a friend's, and she said she had just come from her financial advisor, and her financial advisor told her that, over the next 4 years, they expect what did she say, a 30% correction in the stock market? I must have heard that wrong, because that's far too much. But at any rate, I reminded her of George Soros thinking the same thing, that, because Donald Trump got elected president, the stock market is going to tank. And the exact opposite has been true, right? The stock market has been on a steady rally. Now, that's not to say we're not going to see some sort of volatility or even a correction come into the market with his inauguration. Like I said, it doesn't matter who is the new president. It happens all the time. It happened with Bush. It happened with Obama. It happened with Clinton. It happens. There's a new uncertainty in the marketplace. Mr. Trump has got more than his fair share of press, I would think. But at any rate, I reminded my friend that, the big corporations and the news outlets do have a way of misleading people. So I said I would be a little suspicious if all the professionals and all the experts, I'm using air quotes when I say that, are saying there's going to be a huge correction in the stock market. Well, maybe not. A good trading friend of mine always used to say, the big money is on the surprise side. So if everybody is looking long, you should probably be looking short. And if everybody's looking short, well, then maybe you want to be looking long. At any rate, I'll put the soapbox away. We have our own methodology. We look for shorter term moves, but we do need some momentum. Momentum is big for us. So that's what the tools are for. They try to identify when momentum is shifting. So you get this number 2 signal that says, all right, you should be short. You get this number 1 signal that says, okay, you should be long. And we trade accordingly. And then we use the trade manager to protect ourselves for those occasions where we guessed wrong or we just weren't able to hold on, which is more often the case than not. It's not always a question of directionality, as Andrew was suggesting. It's just being able to hold on long enough to realize a profit. All right, boys and girls, doesn't look like we're getting a whole lot going on here, so I'm going to wrap up shop for the week, and I will see you again on Monday morning. Have yourselves a wonderful weekend, and we'll talk to you then. Bye for now.